Hey guys, so today I'm going to talk about something that's been on my mind that I've researched and tried to find out stuff about on the internet, but honestly there hasn't really been too much out there. So if you went to university in the UK and took out a student loan, you're probably quite familiar with how the system works, and there's a lot of information about how it works in terms of paying it back when you're living in the UK. But if you're someone like me who decided to move away from the UK, live abroad after graduating, how does it all work then? How do you pay back your student loan? How much are you going to pay back? Well, that's what I'm going to cover in today's video. So let's get right into it. So I went to university in the UK, graduated about 6 years ago, and ever since I have worked outside of the UK. So I first lived in France, where I studied a little bit more and worked for about a year and a half before moving to Spain, which is where I live currently, and I've been here for about 3 years. And so I've been paying off my student loan from abroad since about 2019. So I'm very familiar with the process and I know what's going through it, but there's always, little things that come up that always have been on my mind. So if you studied in the UK and you're now living abroad and you've got queries about how much you're going to repay, how to repay it back, and should you pay it off early, stay with me because this is what I'm going to talk about in the video. So for purposes of this video, I'm going to focus mainly on what are known as Plan 2 student loans. So these were essentially the student loan conditions that came into play in 2012 in England and Wales, when the Conservatives made the decision to increase tuition prices. There is a new plan that will take effect this year in 2023 known as the Plan 5 loans, but there's currently no information about repayment from overseas on that because, all the people who will be on that loan haven't even yet started university, so of course there's not going to be information on it just yet. So with that in mind, just before I get into the details of overseas, a quick recap on how it works for if you're in the UK. Now, as I'm sure you're aware, the UK student loan system repayments work based on earnings thresholds. The current threshold for Plan 2 student loans is £27,295 per year of annual income. So that's to say, if you don't earn over that amount of money, then you will not have to pay anything back until you do. And if you do earn over that amount of money, then you pay back 9% on anything you earn over that amount. And your repayment period for that loan will essentially start the April after you graduate. So someone who graduated in December 2022 will start paying back from April 2023, so this year. Someone who graduates in June or July this year will then start paying it back from April 2024. So that's how it works. And the period for repaying your student loan is 30 years after that start date. So that's to say, after 30 years, if your whole balance is not cleared, then it is essentially written off. That's how it works in the UK. And if you essentially live and work in the UK after graduation, you're essentially on the UK payroll of a company, then you won't have to do anything in terms of providing information because the student loan company will pass all of the information on to HMRC, who will automatically make the necessary deductions from your payroll. And so now, paying from overseas is largely similar. It follows the same principles, but there are a few differences in the process, which I'm going to go into now. So as we said, in the UK, the threshold is £27,295 per annual income. This threshold is adjusted based on the country you live in if you're overseas. So I'm going to put on the screen now some of the thresholds. We're going to have a quick look through. You'll see that some countries like the United States of America and Switzerland have higher repayment thresholds due to their higher average salaries and cost of living. You'll find some countries such as British Overseas Territories, countries like France, Germany, Australia, they have the same threshold as the UK. Then you'll see countries like Spain, Portugal, where the cost of living is a little bit lower and salaries are a bit lower, so the threshold is lower than in the UK. And then you'll see, other countries in the world. Let's just pick, Albania, Romania, countries I've been to, where the cost of living is significantly lower. Again, the threshold is adjusted down accordingly. As you can see as well, all of these thresholds are determined in pounds. So what they've essentially done is taken an exchange rate and converted a local currency equivalent into pounds to determine that threshold, or the group of thresholds essentially. And as I alluded to earlier, this is based on reflecting the equivalent cost of living or standard of life that you could expect to have comparable to the UK in those countries and how much it would cost. The next difference is that these payments don't happen automatically. You need to provide information to the student loan company if you leave the UK and you move abroad for more than 3 months. So if you're living overseas, what you'll essentially have to do every year is known as an overseas income assessment, where you will need to provide evidence of your income and your residence overseas for the student loan company. What they'll typically ask for are your last 3 pay slips or maybe a tax tax return if you're self-employed, or if you're just starting out, then a job contract that clearly states how much you're going to be paid will be used to determine your income and then your repayment. If you don't share that information with the student loan company, what you'll essentially pay back is a fixed monthly amount based on the upper threshold income in those brackets. And as you'll see as well, that's also adjusted per company. So the fixed amount you pay will depend on which country you live in. And you'll see and hear stories of people as well who don't give information to the student loans company and essentially go without paying their loan. Now, while they might get away with this in the short term, the longer term consequences can be more serious. You can have significant problems if you come back to the UK, and the UK are trying to crack down on this, imposing sanctions, fines, and penalties on people that do this. So definitely recommendable, whether you like it or not, to just give the information and pay back. And so the same way that what you repay is not automatically determined, how you pay back is also not automatically determined. So you will need to provide bank details or make repayments to the student loans company. Now, the most common way to do this is to set up a direct debit. And so based on what your monthly repayment is determined to be, that amount will essentially be debited from your account. If you have a UK bank account, then it's easy enough to just set this up there. If you've left the UK, you've closed your UK bank account or whatever, what I do is I use Wise. It's a multi-currency account. I use it for a lot of my multi-currency transactions, either when I travel and in the case of paying back my student loan. It's really handy, and particularly when I'm paid in euros and I need to convert money and get the best exchange rate, it allows me to do that. So if you're interested in using this as a potential solution for paying your student loan, I'll leave my sign up link in the video description for you. Now that's it in terms of the process. One more point I want to touch on, which is something that I've really been thinking about recently, is because there's different thresholds for paying back overseas, does it mean that some people who maybe wouldn't clear their student loan in the UK based on what they earn could clear it if they live overseas? That means, would it make sense for these people to pay it off earlier? And so where does this come from? So essentially Martin Lewis, he's done a lot of videos about the student loan system in the UK, and he's often shared, that 70 to 80% of people won't ever pay off their student loan in full under the Plan 2 conditions. Because in order to do so, you need to have a really high salary in order to, pay off enough each month with the minimum repayments to clear the loan in 30 years. Of course, if you live overseas, maybe you're making good money, but you have a lower repayment threshold, then maybe your monthly repayment is going to be comparable in pounds to that of someone who makes good money in the UK. So in this case, would it make sense for you to pay it off early? I've come to the conclusion that perhaps it would. However, there are a lot of factors that you need to take into account if you're living overseas. First is that the thresholds that are set by country are essentially determined by the UK government. So, the UK government can decide to do what it wants. It can raise them or lower them for a particular country as they please. It could also be, of course, the economic situation, the general situation in the country could change, slowly over the course of time, or maybe even quickly in some cases, and that might also have an impact on what you would repay based on where you're living. And in the same respect, there's the exchange rate factor to take into account as well. So maybe you have a favorable exchange rate in one year and an unfavorable exchange rate in another. So with the exchange rate in play as well, that can really have an impact on the thresholds. Perhaps it can also have an impact on your purchasing power, both locally and in the terms of paying off debt. So it might be more beneficial for you to, exercise that purchasing power in your home country if you don't need to overpay, if that makes sense. And then keep in mind as well that you might be someone who's only abroad temporarily. You might return to the UK one day, you might move to another country with different thresholds. So you might be paying a lot today, you might overpay, and then one day you move to, Switzerland or the United States where the thresholds are much higher. And as a result, you're not having to pay as much. So you paid down more than you had to later, not have to pay as much. So, there's a lot of overseas factors to keep in mind as well as, of course, the additional uncertainty factors that you have to take into account in the UK. Like, could the terms and conditions change one day? What is the general interest rate that's going to be applied to the loans be? And I was really interested in trying to find out an answer to this, and maybe I'll still investigate it a bit more because I started playing around in Excel with this, but kind of got to a point where I was like, there's too many uncertainties, there's too many factors to take into account here for this to be something reliable. So honestly, what I've just decided for the time being is just to pay what I need to pay, the the minimum payment, I'll keep an eye on my balance. And if, I see perhaps I'm really smashing it out and have an opportunity to clear it really quickly, then maybe I'll consider it. But, this is my personal approach. Don't necessarily copy me because it might not be right for you. Because at the end of the day, remember as well that in the UK, the student loan system is not like in the United States. In the UK, it works more like a graduate tax. As I say, you pay back based on what you earn, and the loan will be cancelled under the current conditions, at least if you don't clear it in 30 years. So there you go. Anyways, I hope you found this video helpful, guys. I know there's really not that much information about this online out there, so I really tried to bring it all together and make something useful for those of you that do live abroad and have a UK student loan. Leave a comment and let me know, where are you living and how are you managing paying off your UK student loan. Till next time, I'll see you on the next one, and let's get this money.